Hey traders, Raghee here. Welcome to Charts and Coffee. Happy Thursday, everybody. So what do we have going on today? July 8th, we have data coming out. Let's talk about the data for a moment within the context of the weakness that we're seeing this morning, which is actually pretty welcome. If you are someone who's been watching all-time high after all-time high after all-time high, waiting for some sort of pullback to get opportunistic on, this is exactly the kind of morning you've been waiting for. Let's also talk about two aspects of the calendar here before we jump into the questions. All right, so today is July 8th, and that means we have, where are my drawing tools here? Can't have charts and coffee without the drawing tools. Where the heck are they? There we go. So we have a couple things to watch. We have our unemployment claims every Thursday. We have our crude oil inventories number, which should be interesting as we're still in the middle of that OPEC saga. And ultimately, what we want to see is how this market's going to respond to a jobs data point and to a inventory of crude data point. Having said that, remember that today, let's look at the calendar for a moment. Now, I'm not going to tell you I want you all to sort of blindly follow tendencies or seasonals. That's synonymous in trading. Seasonals are just tendencies. They're not setups, right? Seasonals are not setups. However, there is a rhythm to things, right? There is definitely a rhythm to things. And because we as humans have rhythms, we're going to let them play out. We're going to see them play out in the market as well. So today, for those of you that know the way, my slight variation of the Pitbull low, I usually look at Wednesday through Friday of the week before expiration. So the second week, the second Wednesday to Friday of the month, going into the third Friday of the month, we have this Pitbull low tendency phenomena, if you will. And if we're going to see a Pitbull low, meaning a pullback that could be potentially bought into, the timing is actually pretty good for it. So I'll be talking about Pitbull lows this morning, and maybe we'll discuss it in the free video today. But I'll be discussing Pitbull lows later on in the Sector Secrets room and in the futures room. So those of you, just check out the notes that I've shared in the past about Pitbull lows. Could be an interesting timing in terms of the weakness and the opportunity. Today, I was already talking to the group, and I'm saying, hey, look, crew, it's time to go shopping. We don't buy at highs. We're not picking highs. But when things go on sale, blue light special, we're going to go shopping today. So I am super excited to finally see some things that I've been wanting to buy on sale. And if you're looking for other markets that I'm looking at on sale right now, check out yesterday's free video over at the Simpler Trading YouTube channel, where I talk about crude oil. And then, of course, remember the knock-on effect on oil stocks. All right, so that is what we have this morning. Let's jump into the questions. Exactly, James. It is time to go shopping indeed. Now, keep this in mind, and I have a list of names that I am eager to get into when I see you all in the Sector Secrets room in about 15 minutes. The thing to remember about where we are in this middle of the year spot, as opposed to 4, 5, 6 months ago, we have fewer uptrending markets. Okay, how do we know something's uptrending? Sure, we have the green, red, and blue grab candles, and of course, we have our JT multi. What is the JT multi telling us in something like the S&P? I mean, remember what we're measuring here. For those of you that don't know, we're measuring the 8, 13, 21, and 34 EMAs. But the 34 stands alone because the best way to understand sort of the verbiage of a stacked well organized bullish or bearish EMA group. In this case, we have 4 EMAs. Is really to separate the 34. Here's the secret: you separate the 34 from the 8, 13, 21, and that's what we've done here. 8, 13, 21 top row, 34 bottom row. Now, sometimes you'll see a market that's sort of half stacked. 8, 13, 21 are suggesting near-term momentum and sentiment are moving higher. The 34 is lagging behind. And a lot of folks, because they don't separate, confuse a half stack with a full stack. We have a full stacked EMA situation in the S&P. We have it in the NASDAQ, right? So what would half stack look like? Half stack looks like this. That's a slightly bearish momentum, half stack. See what happens here. A lot of traders think there's a lot more weakness than there is. Wrong, right? Where's that in Family Feud? You guys remember that with the big X? Right. That's not bearish. That's actually bearish sentiment and momentum over a neutral market. Half stack, full stack, right? So keep that in mind. Those double greens that we love, they aren't in as many places. But yes, this is the pullback we've been waiting for. And, look, in the meanwhile, what have we been doing? We've been taking advantage of things like bonds, which have been exceedingly good to us. Not gold, though, not gold. There's definitely a detachment between real yield and gold because gold is correlated to the dollar right now. But yeah, we're gonna definitely go shopping. Now, will I look for an inside day? That is going to be dependent on the size of the move and whether or not we're pushing historical volatility levels where it would merit putting a little bit of skin maybe in the game today. An aggro type position sizing, smaller position sizing, and then yes, we might look for that minor low inside day, but we'll have to take that on a case-by-case basis. But start off, gang, I cannot say this enough, start off with the well-structured markets. Make sure you're differentiating the double green from, say, a half stack. Make sure you don't let the 8, 13, 21 alone sway your opinion of the trend when the 34 is a much better way, and separate that, okay? So a lot of questions I get about the JT Multi, that's the way you look at it, okay? And yes, I love you guys are not in panic mode. Love it. My heart is soaring right now because so often when the markets are down, everyone's like, oh my gosh, this is something going on sale. In every other part of our life, we understand when something valuable goes on sale. Our idea of value then is predicated to the trend, to a market that has been moving higher and just happens to be having a session or 2 or 3 of weakness that we believe we can take advantage of. So I love it. This is a buy the dip. You got it. You got it. Love it. Start working up a shopping list. Absolutely. I love it. So, a lot of folks ask me, well, why is this happening? What's going on? And so remember, we are in summer. We might see, again, that tendency of the Pitbull low extend into tomorrow with a minor low, et cetera, et cetera. But probabilistically, nobody knows what's going to happen, right? But probabilistically, physics 101 applies. Body in motion tends to stay in motion, right? Kind of loosely using that to trading. If something is in an uptrend, do you think we've woken up this morning and suddenly hate tech? Do you think we've woken up this morning and suddenly hate the S&P? Do you think we've woken up this morning and suddenly hate healthcare and hate communications? And, is there something that has happened that suddenly we just hate these names, we want to just ditch them? No, it's usually going to be a little bit of an unravel. And typically after the pullback, you'll start to see at lower lows, the buyers, usually the size, gets interested again. Okay, so I love it, love it, love it. Pitbull lows, exactly, Michael. You got it. So John asks, let's see what we got here, John. Do I have a hedge on for days like today? John, again, every trader has their approach. I never, ever, ever hedge. If you have a market, for example, we have bond positions on, would I call that a hedge? No, it's gonna neatly work as one and has been But no, I don't believe in hedging, because hedging must have a setup, just like my buy the dip. In other words, something that is simply extended. Since when is something that's extended necessarily a setup? How long has the S&P been extended? For a while. How many new highs have we seen? So I guess my thing is, unless you have a particular setup, I don't believe in hedging, but that doesn't mean you couldn't. So let me give you an idea. Somewhere in here, if there's a pattern or a reading or something that tells you, this candle or this high or whatever is where your timing and your price level come together to give you an opportunity to short, do it. I just find most folks get run over for a really, really, really long time, only to finally see a move like this where they've either been stopped out because the all-time highs continue to just completely rattle the position, or when the pullback comes, it's just barely break even, maybe a slight gain. So I just don't do it because I find it's just lower probability. Now, which market would you potentially fade? Let's think about hedges for a moment in a different context. And I don't even like the word. If I'm wrong in a market, it's a stop loss. If I'm buying at higher highs, which I never do, I can see the need to maybe want to hedge for momentum entries. But let me mention this. There was a market that was fadeable. If you want to call that a hedge, cool. But there was a market that was in a distribution market trend, aka chop, that was shortable. Let's go back to our JT multi, right? Half stack, right? We have a little bit of bearish. We have a little bit of bullish, right? This is why you must separate 8/13/21 from 34. What did 34 say and has been saying since basically the middle of June? This is a sideways market. If you're going to short anything, let it be a market that is not fully double green, fully green over green. Does that make sense? I hope you guys, I don't want to discourage anybody from the, if that's something you want to do, of course, but don't do it in markets that are, somehow you're believing that you're going to pick the top of an uptrending market. I don't even necessarily, for me, I don't even believe that we'll end up necessarily continue to punch down to lower lows. We'll see. But, it's just a different way of looking at it. So I hope that makes sense for us. I'll give you, those of you in the Sector Secrets room, hey, proofs in the pudding. What are we in right now? Healthcare, right? We were in energy, took that pop, break even stop, and we're in bonds. We're actually very lightly positioned right now, not because I knew this was going to happen. I didn't, but because all-time highs after all-time highs after all-time highs don't give me an opportunity. So very naturally, very organically, we were lightly positioned because we just haven't seen swings across the plate at levels that we can act at. Now, right? I mean, quite literally, the blue light special is spinning in the middle of the store. For those of you that remember those Kmart blue light specials. And yes, if you're interested in learning more about the Sector Secrets Mastery, all things that relate to my trading, intraday, end of day. I mean, that's kind of the clubhouse. Check it out at, that link. Okay, it's on the screen. All right. Hey there, JMO. What do you think of buying McDonald's? All right. Let's head on over there. On this pullback, especially with earnings. Okay, 642. So JMO, if you've checked out 642, those of you that are not aware of 642, aren't up to speed on my approach to earnings, check out the Countdown Trader. Trish has updated. So Trish is my right hand here in the office, and she has look at page 7 or page 8, 7 or 8 in the countdowntrader.com website. And you'll see my 642, 2 updates on the 642 approach. This particular chart would not qualify for 642 JMO because it's not double, look at this. It's half stack, not full. This is full, right? Double green. Double green. This is half. No bueno. Not for 642. Maybe for a ready aim fire or slow stochastic or V-score oversold buy, but the structure is not what I can use for this particular. You would take a look at the structure of the market for this particular structure. I can't. Can you? What I would tell you though is dig a little deeper. Look at the other stocks that are in the same pool as McDonald's and see if you can't find a double green to take advantage of with 642. All right. So thank you for the question, JMO. All right. What else do we have here? Am I a buyer or seller of crude today? JD, my friend, check out the Simpler Trading YouTube channel. I did an entire breakdown of crude, why, what it is, what the saga is, what's happening with OPEC. But overall, we are looking, I'm a bull, I'm a buyer. And here's what I love about having objective tools on the screen. You guys remember that paint by numbers when you were kids, right? This gorgeous picture, and all you had to do is look at the number. And okay, number 7 is magenta, number 2 is cyan, right? Whatever it is. I've tried my best to bring my youth to trading and say, look, can I take a lot of the subjectivity out of trading, take my biases, take my, say, like errors in judgment or whatever it is out and go as process driven up to the point of taking a discretionary trade? Can I mechanize? Can I nearly automate my analysis and then leave it up to me as far as the timing, the entry, and the trade itself? And so notice that we have green grab candles. All right. So the grab candles are green, GRAB. Our JT multi is green. Remember, green over green, that's full. That's our full stack, not half. Got it. And I've got to pull back into the wave, and I'm actually even getting a Darvis pattern signal forming right here. So yes, I'm looking bullishly. I think that OPEC is not going to disintegrate. They're going to do what's in their best interest. Yes, the UAE and the Saudis are going back and forth about production cuts. Russia's trying to say, look, one of you has to compromise a little bit. Let's keep this together, because can you imagine what would happen if OPEC is not, the oil cartel is not regulating the amount of supply that hits the market? That's where the panic is coming from, by the way. Check out that update, and you will see exactly what my plan is. And then remember the knock-on effect into oil stocks. Okay. All right. Moving on to, just bear with me here. All right. Moving on to QQQ. What would I look at QQQ? Dan, I'm going to day trade a little bit this morning. But overall, look, if the markets want to pull back, as I've been saying for a while, the folks who are short, I'm rooting for them. I am absolutely rooting for them. Why? Because that pullback is going to get me, a dip buyer, within this double green, fully stacked EMA environment. It's going to get me long. So come on down, right? I don't know that we're going to break the VWAPs. You can see the VWAPs are holding pretty darn well, but we'll see. So I'm going to keep an eye. But remember, I don't have to engage the long at the index level, QQQ and Q. I can also get more specific to the individual heavily weighted sectors and the individual heavily weighted stocks. Like I said, lots of shopping and watch list building, pricing out to do this morning. Now, these are the kind of mornings that I love. It's timed well with the Pitbull phenomena, some really good structured double green markets to focus on. So I love mornings like this. All right. Dan says, smashed the like button. I appreciate that. Yes, absolutely. Feel free to smash that like button. Feel free to leave a comment. Feel free to leave a question. We do check them. We do check them on Facebook and on YouTube. All right. So I am flat out of time. That Charts and Coffee flies by quickly. All right. So have a great morning. Heads up. Don't panic in markets like this. There are opportunities. Remember where we're structured. Differentiate the sideways markets from the trending markets, and the probability of continuation is far higher. No guarantees, but the probability of continuation is far higher in the kind of structured markets that we talked about. Have a great one. Be good to each other. I will see you tomorrow.